So when we traded back up into that volume bounce low after this big drop off, what's the likelihood of where price is doing this? Is it more likely that they're going to come back down and sweep below the sell side here when we trade at this level, or continue up and take out that high? What do you think the likelihood of this? Clearly, it's going to be exploring the downside, sell side, okay? Why? Because we've been going up for a long time, and we finally worked our way to and through that daily volume imbalance. So it's exhaustive. It's like, I'm just going to throw it all up there and be done with it. And that's what they did. They just pumped it up there real hard and allowed a heavy measure of distribution come in the marketplace. I knew this, and watching the market trade back up into the low of the volume imbalance, then I wanted to see, does my order block give me my signature of when it's going to be good to sell short? Up close candles, your consecutive, opening price, that's your change in state of delivery. It right there gives it to me. It does not, listen folks, it does not require a close below. Okay, that's the entire order block. But your eye goes to the opening price, the lowest opening price of the consecutive candles. In this case, it's this right there. When it takes that out there, all it does is have to breach it. That means trade to it and below it, one tick. That activates that right there. And my eye goes right to that, because everything going forward, the algorithm is going to refer back to that same price. Watch. Man, this is almost like a paid mentorship level. You feel like a charter member right now? I don't even deserve this. Why is this guy giving this away for free? I know. It's probably because I got money. So we have the opening price here, and this candlestick crosses over it. Right there at that point, as of 11:16, we are now in a sell model. Okay? This candle, we open right at the low of the volume imbalance. We open, trade up a little bit, come right back down. Next candle, opening, rallies back up. Does it take the rejection block? There. Because if it takes the rejection block, that nullifies the order block. It completely undermines it, says, nope, don't do it. If I have a trade open, I will kill it. Find that in my lectures. Charter members have no idea. That's the first time they heard it too. So no one's figured that out. You're hearing it now, but you're going to hear it in people talking about it in their live stream. They're going to talk about it in their mentorships and stuff, but it's all here. You learned it today, August 22nd, 2024. And then right here, we cross back down. In here, we do not get the rejection block. And as it was forming lower, as I'm aiming right towards the low of that, I'm getting two things at one time. Failure to get the rejection block, because it should have did it spike right up in it, bang and done. Because if this is a valid order block, it should not go there. And I'm waiting for that. I want to see it. Okay, it's wonderful. Drop. Right there's my fill. I'm eyeballing it, marketing in. And I'm trying to aim it as it's hitting where the body is starting to drop down, drop down, drop down. I'm trying to aim at it as it's hitting the low of the volume imbalance. That shaded yellow area. That's the same section on the daily chart where there's a section where there's no bodies that overlap or connect. It's just the wicks. Everything we talked about this whole presentation today. So then we close here below that price. Every time we hit that, does it support lower? Lower high, yep. Lower, yep. Only going back up into this candlestick here. Sell off. Adding to it. I'm pyramiding. What am I adding into? I'm adding into the low of the new day opening gap on the 20th, right here. Oh, but look at this. You had a little bit of retracement. Right. My larger position's up here, 6. I'm not underwater. It never goes into a negative. It never. Do the math on it. That's why I go in with the higher portion, larger first, and then I can pyramid down here. I can take a little bit of heat on that trade. It's not taking me into negative $1,500, negative $2,500 and hoping and praying. That's not happening. The market breaks lower, comes one more time. What is it hitting here? That's the daily SIBI high. Hits it here. Here. What's this? Rejection block. There. Sells off. What's below here? Sell side. What's these levels here? New day opening gap. When do you get that information? 6 p.m. on the 20th. I'm aiming for sell side below here, and I'm trying to reach below to take this sell side out below here. How did I get to that level? These prices here. How did I get to these prices? This consolidation in here. I love ICT. I love this. I love this. This knowledge is forbidden knowledge. Yeah, it is. Here's a consolidation. I want 1/2 of that consolidation out. That's a standard deviation. Oh, ooh. That's a pretty good place to take profits, isn't it? As it's aiming in, hitting it, I'm trying to get out with the sell side. I don't care about all the bottom tick, scavengers. I don't worry about all that. Your heroes don't have trades like this, folks. Okay, I promise you that. They don't have it. They have mentorships, but they can't trade like this. They cannot trade like this. Period. End of story. Not happening. Okay, so I went long based on experience, and I knew that it pulled some shenanigans is basically what it is. I knew this was manual intervention. That I knew they were going to gun the high. I knew they were going to probably take it up to the high of the volume bounce. I knew that much. And then it was a little overzealous on the upside. So I was right about picking the time when they were intervening. I am not able to do this consistently, but there are few times, and I mean this very, very few times, when the markets are conducive for having these seek and destroy events, which the characteristic of this week is what I told you on Monday in our live stream. I said, be aware that we have Jackson Hole Symposium.